daily Q&A call. I'm Rachel Neighbors, and you are here for the Neighbors Group and Solo401k.com December daily Q&A. We host these sessions so that you have a place that you can come every day if needed to get those questions answered. The end of the year can sometimes be a flurry of activity. So we want to make sure that you are well supported and that you can powerfully use your solo 401k plan. Just as we're getting started, let's do a quick tech check. Just let me know that you can see me and hear me okay. I want to make sure that the camera and the microphone are working properly. Just in the chat, go ahead and type, yes, I can see and hear you. Awesome. Thank you so much. Okay, so thanks, Jorge. So we're going to go ahead and dive right into the questions. Today is Sunday, December 27th. You have 5 days left this year to open a solo 401k by the December 31st deadline. So if you haven't yet done so, go to our website at solo401k.com. Click on the big blue button in the upper right-hand corner that says sign up and join us. All right, our first question comes from Sergio. Sergio says, I deposited $10,000 into the solo 401k and $2,500 from the SCorp profit sharing. I'm going to withdraw $6,250 as a loan from the account. Where do I send the forms to you guys? Great question, Sergio. With a solo 401k plan, you are your own plan administrator. So what that means is that you are the one keeping the records of your plan. You're keeping track of the money coming in through rollovers, contributions, investment returns, and you're keeping track of the money going out when you're making investments, if you're doing distributions, loans, etc. You're the one keeping track of those records. So you're also going to keep track of the loan paperwork and the loan repayments. Now, Sergio, I'm going to share my screen here, and I want to walk through with you how simple it is to take a loan from your solo 401k when you have a plan with Neighbors Group. So first, what I'm going to do is I'm going to log in to our 401k dashboard here. This is what you'll see as soon as you log in. And then I'm going to click on the link right here at the top of the page that says loans. This is where you can create your participant loan paperwork. We have a short video that will walk you through exactly how to complete this short form. And there's also a calculator here on the right-hand side of the page, so you can plug in your numbers and get an estimate of what your monthly loan repayment amount will be. Sergio, once you're ready to take the loan, you'll just input your loan amount here. So you said you want to take $6,250. You would input that amount here. Select your loan term. You have up to 5 years to pay the solo 401k loan back. And then your information will automatically be in input here already. Press the big blue button for submit, and then you will see your loan paperwork is generated. The loan paperwork is going to include a promissory note, amortization schedule, and loan repayment schedule. All you need to do is print and sign those forms or put them into an electronic DocuSign or something like that, and then store a copy for your own records. You do not need to send a copy of the executed loan documents to Neighbors Group. You are your own plan administrator. Now, when you're ready to repay your loan, make your loan repayments, come right back here to your solo 401k dashboard, click on Forms, and then select Loan Repayment Form. This is a form that you can use for yourself. You are the participant, you are the plan representative, so you can complete this form and then stick it in your records along with the rest of your plan documents. So Sergio, you can take that loan whenever you're ready. And then when you're making those loan repayments, it's a good idea to complete that loan repayment form and put that in your plan records as well. Great question, Sergio. Thank you so much for bringing that up. Okay, looks like our next question also comes from Sergio. Sergio says, for this coming year, I'm planning on paying myself $60,000, $20,000 on a W-2, $40,000 on a K-1. Question: how much can I invest into my solo 401k, and from where should the money come from, the personal checking or the SCorp account? So I want to bring up a page that I look at quite often, which is, I'll put this in the chat for you too, Sergio, and then I'll share my screen. So Sergio, you were talking about you're going to earn about 60,000 in your SCorp. 40,000 is going to be on your K1 owner distributions, and 20,000 will be on a W-2. Now, this page from the IRS that I'm also going to put in the chat for you is really clear about SCorp contributions to a retirement plan. And what we're looking at right here is this middle chunk where it says 401k plan contributions. You can make salary deferral contributions to the 401k plan based on your Form W-2 compensation, and your employer can make matching or non-elective contributions to the plan based on your Form W-2 compensation. So, contributions to a solo 401k in an SCorp are based on your W-2 earnings. They are not based on your owner distributions from a K1. So Sergio, I'm going into the solo 401k dashboard now. I'm going to click on calculators and contribution calculator. Sergio, this is a great resource for you. You are a single owner corporation with your SCorp, and then you said you're going to show 20,000 on your W-2. Fortunately, you can contribute 100% of your earnings. You can contribute 20,000. That 40,000 that you're showing in your K1 owner distributions is not subject to self-employment tax. And therefore, it's also not eligible for contributions to your solo 401k plan. If you're only showing W-2 wages of 20,000, then that's what you calculate your contributions based on. If instead you want to contribute more to the solo 401k, you need to increase how much you're going to show on your W-2. And then to answer the next part of your question, Sergio, where does the money come from, personal checking or the SCorp account? Usually the employee salary deferrals come from the employee because that's money that would have been paid to you personally and goes into your retirement plan. And the profit sharing contributions come from the business checking account, but they're all still reflected those earnings on your W-2 so that the IRS gets their self-employment tax. Great question, Sergio. Thank you so much. Okay. Our next pre-submitted question comes from Shen. Shen, I think you're giving us a little bit of background here. It says, hi there, I'll be setting up a solo 401k and wanted to inquire about rollovers. Welcome, Shen. I have the following: a current employer 401k, a past employer rollover IRA, and a current Roth IRA. Which of these can I or should I roll over? And is there a specific time frame that this needs to happen? For example, during the solo 401k setup. Great question, Shen. So it's a really good question. I'm glad that you're asking this because certain retirement plans have certain rules about rollovers. Your current employer 401k may or may not roll into your solo 401k. You'll need to ask your current employer if they allow something called in-service distributions. An in-service distribution is where you're allowed to move money from one plan to another while you're still in service to the company. You're still employed by the company. Each company gets to set the rules when it comes to in-service distributions. Your current employer might allow it, they might disallow it, or they might allow you to roll over a portion of your funds. What you'll want to do, Shen, for your current employer 401k is ask HR if they allow a partial in-service distribution. You can do a rollover at any time. It does not have to happen as a part of your plan setup. The most important thing right now, Shen, from a deadline perspective, is to have your 401k documents from us by December 31st. And then you can do your rollovers at any time. So now moving on to your other questions about the accounts. The rollover IRA, that can definitely roll into the solo 401k, no problem. And you can do that rollover at any time in any amount. The Roth IRA has its own special rules. So Roth IRAs can only roll into other Roth IRAs. And I'm going to share my computer screen here, Shen, so you can see what this looks like. We'll open up the rollover chart from the IRS directly. And you can see on this chart, if we're doing a rollover from a Roth IRA, it can only roll into another Roth IRA. Your solo 401k with Neighbors Group automatically includes something called a designated Roth account. That means your solo 401k has the ability to bring in Roth 401k funds, Roth 403b funds, Roth 457, Roth 401k contributions. All of those are totally fine. Only the Roth IRA is unable to roll into anything else other than a Roth IRA. Now, Shen, what you'll notice as you're setting up your solo 401k with us, when you're going through the online checkout process, we have a couple of items of customization that may be helpful for you. A checkbook Roth IRA is one of those. If you're happy with your Roth IRA where it is, then you probably don't need to include that. If you would like to have checkbook control of your Roth IRA funds, then we'd recommend you consider the Roth IRA LLC. That's the checkbook Roth IRA, specifically because the IRS does not let you roll Roth IRA money into a Roth solo 401k or any other Roth 401k. Great question, Shen. So I would say current employer rollover is a maybe. Past employer rollover IRA into the solo 401k is a green light. Absolutely. That's great. And the Roth IRA is a no-go because of IRS rules. As far as time frame, you can do your rollovers at any time. Okay, a little bit more background here from Shen. I'll be putting about $12,000 into the solo 401k, 25% of my self-employment payroll. I'll be putting about 12K into the solo 401k this year from the employer side since I'm maxing out my employer's contribution. Great. Medium term, I'd like to buy a property in Los Angeles. Prices are very hot and $12,000 won't get a house, and I don't see how they'd give my trust a mortgage. My thoughts were to move some of the cash in the existing accounts above to help kickstart that. That's a great idea, Shen. I think that consolidating accounts where possible is going to give you a larger pool of funds to draw from for your investments. So that's a great idea. Again, the current employer 401k is a maybe, whether or not they'll allow you to roll that in. The past employer rollover IRA is totally fine. That's a great account that you can roll over. The 401k trust can get a mortgage. It's something called a non-recourse loan. I'll share my screen here for just a moment. We have quite a few resources on our website about this. If we go to solo401k.com and we go to invest and real estate, you'll see we have a whole page here on non-recourse loans and a list of non-recourse lending resources. These are banks that are familiar with writing a mortgage for a 401k trust. And this page here, Shen, on non-recourse loans will tell you a little bit more about how the solo 401k trust can get a mortgage. It's something that's quite common, actually. Lots of our clients do it. I've done it in my own 401k plan. Another resource I want to share with you, Shen, if you come to our Solo 401k network, which is at solo401k.net, we have tons of information and trainings here that's available for you. If you go to events and then past, so past events, I want to bring your attention to this training right here, non-recourse loans and the solo 401k. Shen, I'm going to go ahead and put it in the chat here so you can see that. So for non-recourse loans and the solo 401k, in this particular training, we interviewed some bankers that write these loans for 401k plans. And we went over deal structure. Why do they approve deals? Why do they deny deals? What are they looking for in an ideal deal? So Shen, it is possible for your 401k trust to get a mortgage, and we definitely have resources that can help you with that. Now, I think we've got a little bit more questions here from Shen. So which accounts can I roll over? I'm guessing only my rollover IRA. Yes, you're correct. The current employer is a maybe. If more than one, can I do multiple? Yes, you can do multiple rollovers. The solo 401k can accept unlimited incoming rollovers. When can I roll over? Only during setup, anytime. You can roll over funds at any time, Shen. Whenever you're ready, you can do that rollover. It would be great to roll over only once I find a house to invest in. Is that possible? Yep, that's totally possible. So Shen, what you could do is set up the solo 401k. Make sure you do that by December 31st. Do your contribution to the solo 401k. You have until tax day, so you have lots of wiggle room to make your contribution. The only big deadline here is to get your documents from us by the 31st, and then you have until tax day to make your contributions. Then you can be starting to look for the property that you would like your 401k to purchase. Once you identify the deal, then you can roll over those funds so you can prepare for closing. So you can do your rollovers at any time. And we've got our final questions here from Shen. So Shen says, if I roll over, can I keep the funds invested to not trigger a sale? For example, can I transfer over 40 shares of a Vanguard index fund and keep it invested in the new account? Yes, that's possible, Shen. What we would recommend is that you open a compatible brokerage account at Vanguard, and we have trainings and guides that will walk you through exactly how to make that happen. So you can open a Vanguard brokerage account for your solo 401k plan, and then you should be able to do an in-kind transfer. Shen, I'm showing you what the solo 401k dashboard looks like here. If you click on support, that will open our knowledge base at support.neighborsgroup.com. Then I just type in Vanguard to the search bar and hit enter. And you'll see that we have a guide that walks you through exactly how to open the correct type of account at Vanguard. We give you lots of background, and we also have a step-by-step guide that even includes pictures and really detailed information on how to complete the application so that Vanguard will open the appropriate brokerage account. So moving on to your next questions, Shen. Yep, you're doing really great with these questions. Can I open an account for the solo 401k at Vanguard.com? Yes, you can. Use that guide. And are you able to have your Vanguard advisor link the 401k trust account with your personal account so that they are managing the funds? That should be totally possible. We would recommend that you talk to your advisor at Vanguard, and that should be absolutely a possibility for you. Great question, Shen. We look forward to working with you. Make sure you complete your application at solo401k.com. Click on the big blue button that says sign up, and that will begin your online application. And we look forward to working with you. Okay, next question we have is from Yin He. Yin He says, hello, clarification from yesterday's question. If I opt to add a solo 401k LLC, so if you opt to add an LLC to the solo 401k, can I then invest in real estate with the LLC money, but also in addition to that, can I invest in cryptos and stocks with the solo 401k trust money separately? Or do I need to make all investments through the LLC if I add an LLC into the solo 401k trust? Great question, Yunhee. You can invest whatever portion you want into the LLC. So many of our clients, myself included, I use the LLC for real estate. I have a Schwab account for the brokerage assets in the 401k, and that's just in the name of my 401k trust. I also own crypto accounts, and those are in the name of my 401k trust. So Yunhee, you can decide how to isolate the assets in whatever fashion works best for you. Of course, we recommend that you have your tax advisor or your counsel look over your shoulder to make sure you're doing things properly. But yes, you can put whatever funds you want into the LLC and leave the remainder, whatever amount you want, in the 401k. Great question, Yunhee. Okay. Crystal says, hello, I submitted a question somewhere. I'm not sure where it went. I know the employer contribution is due by tax day next year. However, is that the same deadline for the employee contribution? Really good question, Crystal. Let me share my screen here, and I'm going to show you straight from the horse's mouth exactly what the IRS says. So if we go to our knowledge base, I'm just going to close these here. We don't need these right now. If we go back to our knowledge base, so Crystal, on your 401k dashboard, just click on support. That will open the knowledge base at support.solo401k.com. And the magic words that you're looking here for are formal election. So how to formally elect your contribution by the December 31st deadline. The IRS wants employee contributions, that salary deferral, to be formally elected by December 31st, but the actual deposit date may be made by the employer tax filing deadline. So let's click on this IRS source. This is one of my favorite IRS publications. I know that's such a nerdy thing to say, but it's true. There's so much good information in here. This is IRS publication 560. Specifically, Crystal, what we're going to do is go right to page 3, this chart right here. The Solo 401k is a qualified plan, also known as a defined contribution plan. So this middle row right here is going to be all about 401k plans. And this first column that says last date for contribution. So this is what you're looking for, Crystal. Elective deferral, that's the employee salary contributions. The last date for contribution is the due date of the employer's return, including extensions. So to answer your question, Crystal, as long as you formally elect your contributions, which we explain right in this knowledge base article right here, and I'm going to put this into the chat for you, Crystal, so that it's easily accessible. As long as you formally elect your contributions, which means you fill out a contribution form and put it in your plan records. As long as you do that by December 31st, you have until tax day, including extensions for when your business does its tax return, to make your contributions. Really good question, Crystal. Thank you so much for bringing that up. Okay, next question, and this is our last pre-submitted question for today. So if you have any questions you'd like to add, feel free to put them in the Ask a Question link right here, or you can type them into the chat. Yeah, no problem, Crystal. Glad that helped. So if you have any other pre-submitted questions you want us to tackle in today's session, please type them into that Ask a Question link right there, or you can type them into chat. Our last pre-submitted question for today comes from Yunhee. Yunhee says, after moving out of my current single-family rental, can I place that house inside the Solo 401k and rent it out? Really good question, Yunhee. We have people asking us this almost every single week. Hey, I've got these assets that I own, rental properties, primary residence. Is there a way for me to put those into a retirement plan? I wish. Unfortunately, the IRS does not allow you to put any personally owned assets into a retirement plan. Remember, there's 2 ways to get money into a retirement plan. There's rollovers from other retirement plans, and there's contributions from your business earnings. Yunhee, your primary residence, the home that you live in, is a personally owned asset. So the IRS will not let you transfer or sell that to a retirement plan. Same with any rental properties that you own in your own name or perhaps in a rental LLC. If the money used to purchase the property was not originally retirement funds, then unfortunately those funds cannot be put into, or those assets cannot be put into a retirement plan. So Yunhee, you said this is your primary residence, you have a mortgage. You can't put that property into a 401k plan. That's against IRS rules. Great question. Okay, so we've got one more question here from Jorge. Jorge says, you mentioned Schwab a moment ago. I have all of my investments with Schwab. I'm about to transfer my 401k IRA to Solera. Do you know if Schwab handles checkbook 401k LLCs? Does it make sense to transfer? So let's clarify a couple of things here, Jorge. Schwab will not support a checkbook IRA in that they will not be the custodian. So in this case, I know for you, Jorge, Solera is going to be your IRA custodian. I think what you're asking is it possible to have an LLC brokerage account with Schwab, but that LLC is part of your IRA LLC? And that should be possible. We would recommend reaching out to Schwab, but it is acceptable for your LLC owned by your IRA to have a bank or brokerage account. The type of bank brokerage account that they require might be a little bit different. Schwab in particular has certain tiers for their corporate accounts, their SCorps, LLCs, SCorp or C-Corps. Sometimes I think they want you to have 150 to 300,000 as a minimum for opening those accounts. At least that's what it is on the advisory side of things. But I would recommend contacting a Schwab representative. Let them know you have an LLC and what's the appropriate Schwab account to open for your LLC. Remember, from Schwab's perspective, excuse me, from Schwab's perspective, Schwab doesn't care that it's an IRA. This is a checkbook controlled plan for you, Jorge. So all Schwab cares about is that it's an LLC. You're the one that's responsible for making sure that the funds are coming into the LLC properly. So Schwab doesn't care that it's an IRA LLC. All Schwab cares about is that it's an LLC account. In this case, what you'll probably do is have your IRA LLC with Solera, and then you can add on an additional LLC brokerage account at the brokerage account of your choosing, including Schwab. So, all right. Well, I think that those are all of our pre-submitted questions today. We'll give you just another couple of moments here. If you have any other questions you would like to include, we are doing these Q&A sessions every single day through the end of the year. So we'll be here tomorrow, Tuesday, Wednesday, and Thursday, answering your questions, making sure that you have the support you need as you're getting going. If you need anything, make sure you're posting those questions in the Solo 401k network. You can post those at solo401k.net. Our expert team is in the network every day answering questions, making sure that you are well equipped with resources to powerfully use your Solo 401k plan. So join us in the network at solo401k.net, and then we'll look forward to seeing you tomorrow. Have a great rest of your weekend, everyone. See you tomorrow.